right, everyone, this is Vishal from Equity Guru, and welcome to another chart attack video. Today, we're going to talk about a bunch of markets, stock markets, what's happening with the dollar, the bond markets, the precious metals, and of course, a little update on the oil markets. Of course, you guys are up to date on that if you do follow our channel and watch my videos or read the articles up on Equity Guru. We've been talking about that major breakout in oil once it took out $74. Back in August, I believe it was, and we're knocking on the doors, or sorry, we just passed 90, I believe, on West Texas, so close to our targets. But we talked about the ramifications of that and what it would mean for especially the inflation data. And yesterday, I'm recording this on the 14th, but on the 13th of September, we got the August CPI data from the U.S. And as you guys can see here, slight uptick again, 3.7%. That's what we got for August 2023. And, you guys can see this, that yes, inflation was coming down. And now many people are worried that inflation here is starting to pick up. And of course, we all know that central bank or the Federal Reserve threshold is around 2%. That's what they're trying to bring inflation down to. And the thinking is that the Fed has raised rates enough, and the market's actually, I think, pricing in still one more 25 basis point hike that the Fed will hold, and that inflation will come down. But there's now people talking about the Fed's pause may be even more dangerous, or might be seen as a big mistake, right? Where the Fed might have to keep their the foot on the acceleration pedal, trying to tame this inflation, which is beginning to rise. Today on the 14th, we got other data. Wholesale inflation rose 0.7%, hotter than expected. PPI, which is the producer price index, came in at 0.7% in August, which was higher than the 0.4% estimate, and it's the biggest monthly gain since June of 2022. But core CPI, which is the core PPI, not core CPI, but core PPI rose 0.2%. And what that data is it excludes food and energy, which of course are sort of the largest factors, I would say, in inflation today. And then you can see this. I think this is a data which also is being celebrated, but I think if you think about it for a bit, it might warrant a bit more rate hikes down the road. And that is that retail sales climbed higher than expected at 0.6% in August, well above the 0.1% estimate. And you go on CNBC and such, and they talk about how today the Dow's up 300 points because of this good data. They're talking about this, this safe landing potentially with the Fed having rates at a level that would bring inflation down, but will not cause some sort of recession. And then there's the opposite case where people are looking at this and they're saying, oh no, retail sales came higher than expected. That means that people are still spending money. And of course, money velocity, right? People spending money and how fast they spend it, that velocity is a key factor in inflation as well. So, you're having oil prices rise, you're seeing energy rise, and you're seeing retail numbers still coming up higher, which again, might point to down the road that the Fed having to raise rates more than expected. And that was, that's not really priced into the markets right now. That could potentially play a factor down the road. So, inflation data, let's keep an eye on this. Let's see how September's data comes out, but there is a bit of a push higher. And as we've said, it's really to do, the threat going down the road is this chart, right? The chart of oil, which, was paused for a little bit, but the uptrend is still in play. And, we're approaching our first target area at around 93. But many other people have their longer term targets at around $100 a barrel here on West Texas. And, of course, it's not going to go up in a straight line. So we do expect there'll be some pullbacks and corrections, but as long as we, continue the uptrend. So keep an eye on oil and what this might mean for that inflation data. I think we're still going to potentially see more surprises up ahead. And then, of course, next week on September, what is that? That is the 23rd of September, we do have the Federal Reserve. And currently, The market's not expecting any surprise or a rate hike. It expects a pause, but of course we gotta see what Powell's tone is going to be given, this PPI data, this inflation data that's come out. Let's see if he says something here about energy, because the oil markets have been rising due to that, supply issues, right? That there's going to be less supply because of the production cuts, and demand is going to be still strong because of the Western economies, or the world economy. I would say Western because China is doing its own thing, obviously, but the Western economies remaining strong, even though we have interest rates at high levels. How do the markets react to all this data? Well, you can see here, S&P 500 up today. We have the Nasdaq up today as well, and then the Dow Jones, which was up, around 300 points, over 300 points, being one of the strongest days of, or one of the best days since early August. They're talking about the ARM IPO and how that might be, hinting or pointing to this risk on again. Money's looking to jump into these markets, and that might be a good risk sentiment, and money's going to flow back into the equity markets. But from a technical approach, folks, we're still at our resistance levels. There's nothing really changed. Maybe you can argue the S&P 500 is gaining some traction here, but we do still have a major resistance zone around our 45.25 zone, or essentially what was, the recent highs in early September there. The Nasdaq has been attempting, to break above this level for quite a few days here. We had the sellers jump in early September as well. There was a big pop higher on September 11th, and then a big sell-off on the 12th. But then the bulls are still managing to, to jump in here and bring the markets up higher. So I think, just looking at this price action, yes, we do still have a major technical resistance level here, but I think, just given that the bulls here are not stopping, they're relentless here. I think we're going to get that breakout on the Nasdaq here, which will point to, or will lead to higher equity markets. We have a move here on the Dow Jones as well, but again, still in that major resistance zone. Then let's take a look at the the Russell 2000, which is of course the small caps, and we do also have a bit of a pop today, a nice engulfing candle that's printed here at a support level, which also sort of has a potential move higher, at least up to that 1900 zone. So the market's, reacting positively to all the data here. I would definitely be watching or keeping a closer eye on the Nasdaq here, because that's the one that looks like it's ready to break out given all the current price action here. But there's two charts that I've always been talking about, the dollar charts and the bond yield charts, just in case the market gets a breakout in yields, because right now a lot of people are thinking, okay, interest rates are nearly done. So the idea is, you buy bonds around this yield, because if you're thinking yields are going to stay the same or drop lower, then the bonds you're buying now are going to be yielding much more. But you can see here that yields are just also still hanging around our major resistance zone. And I think I've mentioned in the past, but there are some big money investors there like Bill Ackman expecting a breakout on the yield curve. I wouldn't maybe say expecting, maybe it's more of a hedge trade, but they do. I know he has a trade where he's expecting the 30-year to go to 5.5, and it's 4.38, which means that rates here are going to still head higher. And again, with all the inflation data that we've had and the retail sales data, is that going to be enough to basically change this idea or this market paradigm of the Fed pausing, right? Or is the Fed going to look at that data and say, hey, it still warrants a bit more rate hikes because we're seeing inflation go higher? And, of course, they won't really say it, but they do want that retail sales number of the economy to sort of slow down to, try to hamper or put a lid on money velocity. And again, retail sales came out higher than expected by quite a substantial amount. So keep an eye on these yields. They're still hanging around here, even though we had these major sell-offs, near the end of August, which was a good sign that, okay, if we have this major sell-off, that the markets will continue to move higher. But yields are still staying quite high, and there's still that danger of a breakout in the yield markets. And I would just be interested to see how the equity market reacts to all of that. And then we look at the US dollar chart. And, some would say that this rise here is more due to this idea of the Fed potentially still being a bit hawkish. We are approaching a major resistance level here on the 105.50 zone. And maybe the Fed next week, maybe that's what gets this to break out, right? And we get a stronger dollar with this idea that the Fed's going to remain a bit hawkish, which would set us up for a move up to 110. And then there's other people who say that now the move in the dollar is more, geopolitical, and it has to do with maybe other things going around in the world. But we're not really seeing much volatility in terms of the risk. You're looking at the VIX here, which is also dropping below support level. And people say the dollar is like that safe haven, right? So when things are a bit strange or a bit risky around the world, money will run into that dollar. But you're not really seeing a move also into safe assets such as bonds or other such things. So I think this might be more Federal Reserve type of play here. So keep an eye out here on the dollar, because the dollar is still very strong. So you have that dollar chart, you have the yield charts, and then you have the inflation data, the PPI, and the retail sales. Again, folks, I'm just thinking that maybe the markets are going to still meet a wall of resistant sellers here. But again, we have to just be patient and wait for these breakouts here on the markets. As I said, the markets look very stubborn. Even though we're getting some sellers jumping in, the bulls tend to keep control and make us retest that resistance level once again. But you're seeing the exact same thing with the yield charts as well and that dollar. So maybe there's some fishy thing going on, right? We know the Fed has that funds protection team as well. But keep an eye on all these charts, that 2-year yield and the US dollar chart. And of course, folks, oil, again, this is a trade that we've been given. We gave readers and viewers. We talked about this breakout, way back in, it was July. It wasn't August, but it was July when we talked about this breakout here. We even talked about this trend line and this channel, this flag pattern. And oil is going to be, it's heading into the trajectory that we outlined in those videos and those articles. And it looks like, 93.50 is the next zone coming up ahead. If we finish off here with the precious metals, not much happening for the gold markets here. There's a higher low here that I was watching, which actually did break out, or we broke down on the 13th of September. And you can see how today's candle actually touched it, and we saw the sellers jump back in. So I think, this trend line I have here, or sorry, not this trend line, but this resistance zone I have is quite important, and it does come in at like that 1912 zone. So we'll see if gold can break above that. But right now, I think an interesting one would be the chart of silver here, just because where we're at, it's in line with this major trend line that I've drawn out. And, some will say that this is a bit of a triple bottom, right? You have support here at 2220, and this is the third time that silver is testing it. And as you can see by this large wick here, there are buyers that are stepping in here at this support zone. So the way I would play this is that, I wouldn't really just buy now and put my stop loss there. I play it a bit more safer, I guess. I just like to align all my probabilities. But I'd like to see maybe a close above this daily, a lower high here around that 2320 zone. If you want to be a bit more aggressive, you can come down to the 4-hour chart or the hourly or the 15. Interestingly, the 4-hour, we still have that lower high aligning with this trend line level, but some may even push it down here to 2290 or 23. So keep an eye out on the support level. It does look quite interesting for the silver markets, exactly where we're at. But again, folks, if that dollar does break out, say next week because of the Fed, then I think that silver will be in this major breakdown where we close below this major uptrend line, which we've had since September 2022. And if we do that, then silver bulls, unfortunately, we're going to have to remain a bit more patient for a bit longer, because I think that would lead to drop here to the 2050 zone or the 21 zone in the long term. So markets, very important traction points right now. The silver market, where oil's at, where the bond yields are at, where the dollar's at, and of course the equity markets just still testing those resistance levels. So The Fed is obviously going to be a big mover next week, and I think that might be what the markets could be waiting for as well. So it'll be interesting to see if the markets do indeed break out actually by the end of this week. How are they going to react, or if that breakout is going to be short-lived because it turns out to be a fake out, given what the Federal Reserve says, or if it just continues the momentum from the Fed, right? But I think next week is going to be quite interesting because of all this inflation data and the PPI data, and of course the oil markets, which has come out this week, and how Powell is going to react to all of that. But that's it for me, folks. If you enjoyed the video, give it a thumbs up. And let me know in the comments below where you guys think the markets are going. Are you shorting still, or do you think we break out above these zones here and eventually, go for a retest of previous record highs, and then eventually breaking out to new all-time record highs? I really want to know what you guys are thinking, and I'll catch you guys all in the next chart cycle.